Welcome to NREI's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at NREIonline.com. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. Let's dive into this week's story. Good afternoon, David. How are you?
I'm doing well. How are you this week?
Doing fantastic. I am traveling right now, David. I'm actually in Colorado, and it is gorgeous here. Oh, love it. Just love the mountains.
That's nice. Where are you, Denver or somewhere else?
Let's see here. I am Glenwood Springs. So it's a couple hours west of Denver area.
Okay.
Yep, just beautiful.
Yeah, I only made it out to Colorado one time, but it was very beautiful.
Yeah. I miss it. Being in Nebraska, it's very flat and very little water that's clean. So this has been a nice change. I stood in a stream. Now, I will tell you, my toes were numb within 3 seconds, but it was so worth it. Oh, man. So beautiful. So, all right. Well, enough about my travels and my numb toes. What are we talking about today?
We are talking about our annual research into the retail real estate sector. This is a part of our NREI research series, one of the about dozen reports that we do each year. This one specifically looks at the retail sector.
Gotcha. All right.
And so the good news, I think this is like the fifth or sixth year we've been, for all these studies, we're like on our fifth or sixth year. We do one for every property type. And generally, not surprisingly on retail, there's just been a steady year over year decline in the sentiment, that tracks with the struggles in the industry. The good news, potentially good news, depending on, I guess we'll see what happens next year, but based on the sentiment of our readership, it kind of seems like there might be some light at the end of the tunnel finally. Okay.
And what does that light look like?
So just, I think like as a general kind of takeaway from this whole report, we ask people about, a whole number of things about their plans, about how they're going to invest in the sector, what they see in terms of some of the trends and specific metrics that pertain to investment and leasing, development, et cetera. And basically the very, I think without exception, on every single one of those questions, we found less bearishness, more sentiment moving towards like things are going to be at least status quo, still not a tremendous amount of people thinking like things are going to go up and away. But I think, the important thing is just to look at all these things on a relative basis. And so again, as a top line on every single one of these metrics, the answers on the most negative end went down. The answers in the middle tended to go up, and the answers for like the people that thought things were going to really improve on any one of these metrics also went up, at least a little bit.
That's good. So there's more of a positive outlook is what you're telling me.
Yeah. So, I don't want to present it as if people are saying that retail is suddenly going to have like a great year. That's not the takeaway, but it's at least the first time since we've been doing this that there's not a very clear, not declining sentiment about everything. If you look, basically in previous years, we'd always see a ton of people thinking cap rates are going to go up, a ton of people thinking that rents are, not going to increase, a ton of people thinking that occupancy rates are not going to improve. And this year there's less of that. So gotcha. I wouldn't classify the findings as bullish by any stretch of the imagination, but at least it feels like a lot of the real pain, that we're certainly still feeling it. There's store closings still being announced right now. We've talked about many chains that have closed within the past couple of months. Mm-hmm. So, there's still an ongoing amount of pain that's happening. But I think the takeaway that I get looking at this is that people feel like maybe there's not that much more of it to come. And maybe we are going to stabilize, and maybe even in some places we'll see improvements.
All right. Good deal. What else can we take away from this survey?
So I think, specifically talking about, in looking at some of these numbers, we look at the investment climate. In past years, we've had close to between 35 up to even 40%. When we ask people, do you plan to buy, hold, or sell? The sentiment saying sell has been between 35 to 40%. Mm-hmm. And the sentiment saying that they wanted to buy in retail was down around 20%. And then, about a fairly consistent chunk in the middle saying, answering they wanted to hold more around in the low 40s. This year, the sell sentiment dropped to 28%, and the buy sentiment rose to 25%. And then, then you still have now about 46% saying they want to hold. But to me, when you have now, the lowest number of people in any of our surveys saying they want to get out of retail, that's along this theme of one of the good signs.
Yeah, and it's a good chunk of a percentage. I mean, it's down almost 7. I mean, that's pretty high.
I think so, about 7%. Yeah,
that's good.
And then in the years before that, it was even a little bit higher. So in the years that we've been doing this, this is definitely the lowest number that we've had for people saying very clearly they want to sell. Similarly, on cap rates, there was an even more dramatic shift where a year ago, more than 3/5 of respondents were saying very clearly, we think cap rates on retail properties are going to rise. Only 63% saying they were going to rise, 21% saying flat, and only 15% thought that cap rates might tighten. This year, the people thinking that cap rates might rise dropped all the way to 45%. And then about a third said there would be no change. And then even a fifth now, from 15% all the way to almost 23%, actually almost a quarter, think that cap rates will fall on retail. So again, that's a pretty big shift on all those numbers.
Mm-hmm. Definitely. And again, to me, good news. Yeah.
Yeah, I think good news. It's again, cap rates going up or down. There could be other exogenous factors, including interest rates and those things that are affecting it. But I think it's always good if people are not expecting cap rates to rise, because it means that they think that investor interest in the sector will be at least stable, if not improving. Mm-hmm. So I think that's good.
All right.
And then one other sort of piece that would affect the level of investment is we ask people about capital availability, whether the amount of equity and debt that's in the market right now, how does that look relative to 12 months ago? And basically the answers were very similar for both debt and equity. About 1/5 of respondents said that there's actually more debt, more equity available to retail properties. About 40% think that the level is unchanged, and only about 30% think that there's less debt and equity chasing the sector. So it's again similar to the other questions, stable to improving, a little less seeing a more negative answer on that question.
Yeah, and these are people's perceptions. I mean, this doesn't necessarily mean that this is what has happened or what is going to happen or anything like that. It's just what their perception is, which again is a good gauge to kind of feel how people are feeling in the market. I mean, they're gonna move based on how they feel. So maybe it's just they don't have the right numbers, they don't know the right information, but they feel like less is available, or they feel like more is available.
Right, and I think, and again, the value that I find from the research we do is by asking the same questions year after year, it does give you a frame of reference on that sentiment. So obviously people saying that cap rates are going to go up and other people saying cap rates are going to go down, both of them can't be right. So,
yeah, exactly.
Somebody's going to be right or wrong in that on the question, but like the overall balance of that, and then the overall how those answers fit relative to previous years, I think that's the way to kind of look at the survey that we do. So basically the ultimate takeaway on investment in retail, based on the survey, is that I think at the very least people are expecting 2020 to be pretty stable compared to 2019. That there's not going to that there aren't a lot of people pulling back from buying in retail properties. That it's not going to be like a gangbusters year. We're still probably some time away from that, but that people are feeling at least a little bit better about spending money on retail properties. And I think one of the challenges with the surveys, we do ask kind of retail as a broad bucket, and obviously retail has subcategories within it, but we also did ask for the first time this year for specific outlooks on different kinds of retail properties. So are you going to be more inclined to invest in a regional mall or versus a net lease center versus a lifestyle, versus some of these other property types? And what we found on that is that, and it not terribly surprising to me, but that single tenant net lease is the most popular retail investment. After that, neighborhood centers. After that, lifestyle centers, and then a couple other sectors, but regional malls at the bottom of the list. And I think that sort of tracks very closely with the retailers that the types of retailers that we're seeing struggle and what kind of properties you would see them in versus the kind of retail that's more stable, that continues to do well. So people who are going to spend in retail, still feel feel good about single tenant net lease properties. They feel good about neighborhood centers, grocery centers, necessity retail, that kind of thing. And still a lot of trepidation about regional malls.
Mm-hmm. Gotcha. Yeah, that makes a lot of sense.
So I think that narrative also, I think, could be affecting, that's sort of a sub narrative looking at those sectors that stems off of like this overall, the overall questions that we ask about investment. So I think that kind of covers the investment side. The other, we do also have a set of questions that covers, leasing, since that's where the income is going to come from. Do people expect that occupancy rates are going to go up or down? Do they expect that rents are going to go up or down? How do they feel about the level of development? So those are the kind of questions that we ask here. And, again, as that related to the overall theme, the numbers were all better than in past years. Only 22% said they thought that occupancy rates might fall, which was down from almost 28% who thought that the occupancy rates might fall last year. And up to 32% actually think occupancy rates will increase, compared to 25% who said they would increase last year. So there's like a kind of a clear about a 5 to 6% shift on both from both sides of things in terms of like people's expectations on occupancy rates. And then folks that expect it to be about stable was about the same. So again, clear shift in the right direction.
Yeah, absolutely. What else we got?
Then on rents, similar thing, 48% expect rents could increase. Only 21% think rents might fall. And that, again, was about a 5 to 6 percentage point shift from the numbers we had in last year's survey.
So is that a good thing or a bad thing?
No, it's a good thing if they think rents are going to rise. Yes.
Okay.
Because it means more income.
Well, yeah, for the people that own the building.
That's who
the people that are leasing. Yeah, that's like, yeah, okay. Well, I mean, that's understandable for the owners of the real estate, and I understand that that's what this podcast is about. My concern is, if they're thinking rents are going to rise, which is, obviously they have to rise for a lot of different reasons. Inflation's, their taxes may be going up. Their, whatever they're providing, maybe those expenses are going up as well. But I was going to say this earlier, but you said that most people think this is going to be a pretty stable year, 2020, and I know more about the stock market than I do about real estate. I'll just be very, very honest, but I'm wondering about November, right? What's going to be the effect next November or the months leading up to November? Is that still going to be the sentiment? Are people going to be more cautious if rents are going up? Are people not pulling the trigger on taking their business into a certain area because, there's concern? I mean, there's a lot of factors, obviously, but if you say that rent going up is a good thing, then I'll believe you.
Yeah, I mean, the point of view of this survey, we're talking to the owners and developers and whatnot. So from their perspective, rising rents are a good thing. Yes.
Yeah.
And that doesn't also, the way that we have that question, those percentages that I looked at don't quantify those rental increases either. So that could, like whether that means a slight rental bump or a gigantic rental bump is a completely different question.
Yeah, true.
If we're talking about just like, keeping up with market rates, keeping up with inflation, that's a little different than like people like trying to jack up rents because there's such tremendous demand in the market that like, you can demand top dollar. I mean, we're not there. So
yeah,
I think, I mean, like if you look back at this question among all of them if you look at the historical numbers, there's a lot of change. Back in 2015, 80% of people thought we're going to see rising rents in the next year. So, versus like 48% now. The other ones, I think there's movement, but it's not quite that dramatic. I mean, so we went from, I think that tells you a lot about how much things have changed in the retail sector. how healthy things were just a few years ago, where, occupancy rates were really high and people just expected that rental growth was kind of a, locked in thing that would happen, as opposed to now it's like maybe 50-50 we'll see it, or maybe on 50% of properties we'll see it, or maybe only on, grocery anchored centers, which are healthy, and we're definitely not going to see rising rents in malls, that kind of thing. That other thing that you pointed out though about the election, I think that is hanging over, I think it definitely affects commercial real estate. I feel like when we have election years, just the uncertainty of what the outcome is going to be always has a little bit of a dampening effect on activity, just like it does with like you were saying with the stock market. So that could complicate, what happens in the retail sector too. But I think that's kind of like baked in. Maybe that might be baked into people's assumptions, since we're sort of used to election years being, especially presidential election years, being a bit uncertain. And then this particular presidential election year is particularly dynamic for reasons we, don't have to.
Yeah, they're pretty obvious. Yeah. It's gonna. Yeah, I've got my popcorn ready for the circus, so I'll be sitting right next to you, brother. So it'll be interesting to see how it plays out.
We're sitting here, like 340 days to go.
Yep. Just watching the monkeys get prepped. they're getting their shows ready. So
yeah.
All right.
Yeah.
What else? What other takeaways do we have from today's?
Then, the last sort of major sentiment we ask about is on development, and, particularly whether people might be worried about there being what we're looking to identify here is if there's a real concern about overdevelopment, and there's not. So only 17% said they thought that the level of development was too high relative to what their region could accommodate. 60% said it was the right amount. Only 9% said too little. We had kind of a large number, almost 15% said they don't know, which is a little bit higher than past years. But, as long as we're not seeing 40-50% of people saying, yeah, we're building too much stuff, it doesn't jump out to me as a red flag. I mean, I think that people think, there's not a tremendous amount of retail development happening just because of the dynamics in the sector, but the amount that is happening, people seem to feel pretty good about.
Yeah. And again, this is more of a perception. And can you tell me, and maybe I missed it at the very beginning and I haven't seen the full article, how many respondents did you have, and are they located in all 50 states? How's that work?
Yeah, so that's a good question. This year's survey, we had 231 respondents. Generally, we shoot to have a minimum of 200 respondents to any one of these research surveys. Some of them we do end up getting up to 400 or 500. But 200 is kind of our baseline for statistically significant sample size that we need to have. Geographically, it's diverse. I don't know if we live literally, we don't ask by states, but we do ask by region. So to make sure that we have people from the West, the East, the Central, and the South. I think we break it into kind of 4 big regions, and it's pretty representative. It's definitely representative in that sense that we're getting pretty equal numbers of people that operate in all four of those regions.
Yeah, and so therefore it leads again to what we were talking about before, where this is somebody's perception, and they may be living in a certain area that is very, developing very quickly because of industry or because of whatever other factors are there. And so they may be answering, there's too much development. Stuff's going up too quickly. And so there's a little bit of a saturation in this area. And so that's why they're choosing to respond that way, compared to somebody who's in an area that's more established and things are coming in, but not necessarily at the gangbuster rates that a less developed area is. So, but it obviously with that many people responding, that gives you a really good picture of what's going on nationally.
Yeah. And I suspect that if we did do some cross tabs where we broke down all of these sentiments by those regions, we'd see slightly different, you would definitely see some shifts. I think for sure, that's the Midwest I would hazard to guess would have the most bearish answers on all these questions. The West and the South would be fairly strong, and the North would be kind of in between.
All right.
based on overall economic, we do ask people, it's not included in the write-up, but we do ask people to rate each region, and that's how they come out. So
gotcha.
it's pretty, we also ask that like across, and that's not just for retail, it's kind of like across the board we ask that in all of our surveys to kind of, for people to score their regions on a scale of 1 to 10, and fairly consistently the West and the South are always at the top. The Northeast tends to be a few 5 to 10 basis points below the scores that the South and the West are getting, and then the Midwest is a few more basis points below the North. No one's ever, but it's not like a dramatic split. It's not like we're getting like 8, 9 in the West and the South and like 5 in the Midwest. It's more like, I think closer to maybe 7.5 to 8 people feel about the strongest regions, and then 6.5 to 7 for the Midwest. So it's only, so there's a difference, but it's not like this massive chasm.
It's not extreme. Yeah, it's not extreme. Yeah. Got it. Okay. All right. I know that they can find this survey online, and plus there's a ton of graphs and visuals there that we can't obviously represent very well on a podcast, but they're there. And for those visual learners, I encourage you to go to the website, check this entire report out because it's very robust, and take a look at those graphs and get some really, really good information. Any closing thoughts for today, David?
Yeah, that's kind of the takeaway for the report. Just say that the title of it this year is called Light at the End of the Tunnel. They could find it if they go specifically to the research series portion of our website, which they could reach in the drop-down menu. They'll find this one. And I think as I said earlier, we do about a dozen of these. So we have all the ones that were already published earlier this year for people to look at as well, which cover like multifamily, hotel. We also do some topical ones like the state of financing, what's happening with commercial real estate brokerage trends. And then we got one more coming up that we'll be publishing in the next week or two which is always a really interesting one, which specifically looks at how high net worth investors are approaching buying commercial real estate.
All right. Well, thank you, sir, for your time. Very educational. I encourage everybody to go check those out. Thank you so much, David.
Thank you.
You bet.
And enjoy Colorado.
Oh yeah. No, I will. I'm going to take off here in a little bit and go explore. All right. And thank you all for listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thanks so much for listening today. For everyone at NREI, this is Eric Johnson inviting you back in 2 weeks for all the stories that matter to you. And we'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of NREI or Informa. The content has been made available for information and educational purposes only.